7. Is Ryan not gonna make it?
He dropped out.
What do you mean?
Dropped out of college.
You're kidding.
No, he's late.
I didn't think he'd drop out. I'd say if he dropped out, he must have got a mental problem. Okay, I guess a lot of people out there are live streaming, and we're getting down to the last days, and I think it's important to be here. We've got a lot to cover. Now, today is November what? Okay, and Thursday will be November the 15th. Well, next week is November what? I know we're off for Thanksgiving. Is that the 20th and the 22nd? I think Thanksgiving's on the 22nd, right?
We're off the 18th.
Our class is on the 20th and the 22nd, that we won't be here.
Right. All right. So then when we come back,
The 27th and the 29th.
we got 11, 27, and 11, 29. All right. Then we get up here to 12. What would that be? 6?
4 and 6.
Huh?
12, 4, and 6.
12, 4. Wait a minute.
Tuesday and Thursday, right?
Okay. If Thursday's on the 29th, yeah, that would be 12, 4, wouldn't it? All right. November has 30 days. And then we have 12, 6.
Yes.
Okay. Now these 2 days are gone. That gives us this week. Today we're going to finish chapter 8 and start on 9, hopefully. And we're going to chapter 9. Well, that don't leave us much time to finish up chapter 9. Now, when do exams start?
First week of December.
What?
First week of December.
Oh, on the 4th and 6th? Oh, crap. We don't have much time for all these chapters, but we got to do them. You mean we don't even have class on the 4th?
That's exam week.
We're getting out early, aren't we? All right, we better get with it then.
So when is our final?
Their schedule's out. It should be on the web page.
Oh,
Okay, I'm gonna give you Kelly's grades. I think she made 102 and 104 and 92. All right, you're gonna have 400 points in here, and 90% of 400 points is 360. That's for an 8, right? Now, Kelly already has 298. So how many does Kelly need for an 8 in this class? What does she need to make on the exam? She needs to make a 62 on the exam for an A. So that takes pressure off Miss Kelly then, don't it? Okay.
Doesn't online homework count as part of that too?
The what?
Doesn't the online homework count as part of that too?
Yeah, I've got to know how to figure that in, yes. Yeah, I've got to figure that in, and that actually would probably lower this to probably a 60 or something. Yeah, I got to look at that online. It's Engage, yes. It's Engage. That's a lot of work not to get some credit for it. But now, on the other hand, if you've got, you know, a 65 and a 65 and a 70 out of 400 points for a C, you need 280, and you've only got how many of those? 200? It means you got to make 80 on the exam to get a C out of the class. So it depends on what kind of hole you have dug yourself, and it depends what kind of mountain you put yourself up on. Okay? So I see Joshua is figuring his up right now. Okay, but all of you can take your 3 grades and see if you can figure up your grades, okay? I'd like for all of you to do well. I'm assuming everybody in here, yeah, just looking around, everybody in here, you're going to be eligible to take accounting 2. Now, there's some folks enrolled in this class will not be eligible to take accounting 2 because they're not going to make it through accounting 1. You see how much they care. They're not here. You know, but I didn't mean to make that rhyme, but it was time. Okay. All right. Now, there's a couple out there that just never been to class. I got some of these online folks also. Some of them are doing okay. All right, I assigned you some problems for bank reconciliations. I gave you 2 or 3 little ones for today. And I want that one big one handed in on Thursday. And I'll tell you which one that is in a second.
Oh. You gotta get that.
Ryan, can you do a bank reconciliation? Well, can you do one?
Yeah.
Did you do one for homework?
I think so.
Did you do one on Cengage?
Yeah.
How many is 100% finished with Cengage? Nobody. All right, you need the 100% excuse me, finish Cengage chapter 8 by Thursday. Should have that done by Thursday. We can't play around with chapter 8 forever. Learn about internal control. Now, what was your first exercise or problem on chapter 8 today? The what? 838. All right. We're not going to spend a lot of time, but you do need to do a bank reconciliation.
The one you told us to do for bonus was PR858, right?
That's for Thursday.
Yeah.
That one's to hand in. The first 2 problems, problem 1 was just on internal control. Employees should be allowed to use the petty cash fund to cash personal checks, but it says not. That word not makes a lot of difference. You know, personal checks can be a problem. I know one school system I audited at one time that cashed a lot of checks for teachers. And a lot of those checks were bad, and they had not tried to collect them because they did not keep up with their accounting system. Requiring cash registers clerks to make up any cash shortage from their own fund gives the clerks an incentive to shortchange customers. Requiring cash register clerks to make up any cash shortages from their own funds. I don't think that would give you an incentive, would it, to shortchange? No, you'd shortchange customers so you'd have extra money. And that extra money would make up for any other shortages. All right, the mail clerk should prepare an initial listing of cash remittances before forwarding the cash receipts to the cashier. This establishes accountability. The mail clerk should forward a copy of the listing of the remittances to the accounts receivable. Again, don't send cash in the mail. I don't see why you would. Send a check or a money order. Now there's so many ways to pay your bills. You can pay them online with your debit card, PayPal, what have you. Okay, now number 2, without going over it, was petty cash. You establish a petty cash fund by debiting petty cash and credit cash. And you debit cash and you credit cash over and short and credit sales if you were short $32. But now here is to replenish your petty cash fund. You got a petty cashier up here with $900. All right, that petty cashier wrote out $470 for store supplies, $140 for delivery, $110, and then $90 miscellaneous. But when they went to count their receipts and their money, they were short by $15 in petty cash. And you write out a check for $825, give it to petty cashier, and that puts $900 back into petty cash. And here it just sales again, and here you had a short of 14. Up here you had over of 32. All right, now you don't need 900 petty cash. So you debit cash and credit petty cash for 200. That leaves 700. All right, but I didn't have you do those two problems. All right, now 3A. Alexander, does yours match this? 370,000.
No, I was at 369,820.
That's close. I don't know. Where's the difference? Ryan, does yours match this? 370,000. Exactly.
Yeah.
All right. Alexander, I don't see how you could have got an answer like that, but let's see.
Out the 180.
Oh, he left out this 180,
Looks like if it's.
and that left 369, 820. Then what would he have had to done down here?
Figure out just drag to 145.
Yeah, but that'd still be off.
Could just be a little writing here.
Okay, so you add a note for 42,000, an error in recording a check, $6,840, a bank service charge. Now that was deduct. You added the note 370. Okay. Dylan, did you get that correct?
I did the same thing.
The 180?
Yeah.
All right. Josh, did you have it?
I'll be honest with you, I forgot to do it.
You have to do it. Say, do you not have your book with you?
Oh, yeah.
Oh, you got your book.
Just didn't
Okay.
have a problem.
All right. Anyhow, we got to do bank reconciliations. Now remember, journal entries are only made from this bottom portion. All right. And we got to debit cash for this note and credit notes receivable. We got to credit cash for this service charge. We got to credit cash for this mistake. All right. So 2 entries would do it. I hate for you to do it in 1. We'd rather you do it in 2. So here we collected cash, the note and the interest. I looked over the interest that was together. And here accounts payable. You made that big a mistake and accounts payable.
So the service charges go under miss expenses.
Do what?
Service charges go under miss expenses.
Yeah, miscellaneous is fine. Some companies may call it service charge expenses. All right, did you have another problem? 4A today, right?
Awesome.
And then 5A on, wait a minute, which one's for Thursday?
5A.
All right, who got 39,475? Did you get that one, Margot? Kelly? Anybody else? Get that correct?
I've got to get this one out.
Got that right? How many people did do it? Just Kelly?
She gets a gold star for the day.
Well, she's very strong. All right. Okay, now looking at this one, let's see if there's a lot of difference. Cash balance according to the bank statement, deposit in transit. Now here was a bank error in charging check $930 instead of $390. That was the bank's mistake, and they've got to give that back to you, okay? $540, and then deduct outstanding check. So usually it's that simple on the bank side. Now, cash balance according to the company's records, add a note and interest, a check return, an NSF check, bank service charge, and then a $90 error. All right. But here, how'd you have to find your cash balance? How'd you find the $35,670? You took the beginning balance, you added deposits, and subtracted checks. Just like doing your own checkbook to come up with that. Now, to make entries, we only make entries for this bottom portion. We debit to cash and debit to notes and interest. But here we debit accounts payable. We were messed up $90. Now, that bad check, we're putting it back in Jennings Company. Now, miscellaneous and credit cash. But now, what if we can't collect this bad check? Then what do we do?
Take the car.
Get a hitman?
You don't tell them they can't pay that.
Yeah.
Whatever.
What if they don't pay? What if they won't pay? What if this company went bankrupt? We'll learn about that under bad debt expense. Then we would write it off as a bad debt. All right. Now, your other problem here is Chapter 5, due Thursday. I'm going to give you a check figure, $13,216. That's a check figure, $13,216. All right. And do your journal entries. So please have that one done by Thursday. All right. So we're going to leave.
Can I ask a quick question about that one? How do you find which checks are like not right? It says identify like 4 checks that are supposedly not right. How do you figure that out?
Wait a minute. It says to identify 4 what?
Well, it says deduct outstanding checks.
Oh, okay. I got it. Okay. Just a second. What page is that problem on, Alexander?
432.
432? All right, now look at 432, folks. Now, to get my bank balance, I will have to take my beginning balance and add my deposits and subtract my checks, won't I? Now, you got the bank balance. Now, you may have some miscellaneous charges there. You got an MS of 3,500, and you got an MS of 210. Now, that could be they collected a note, and that could be a mistake or whatever. You got to read about it. But now to answer Alexander's question. All right, now Alexander, on page 432, I'm going to look at check number 740. Look over here on the bank statement, see if that check 740 has been cashed.
No, so if it's not listed on this sheet, then it's the one that's outstanding.
Do what now?
If it's not listed on the page 433,
Yeah.
is that how we know it's outstanding?
Yeah. All right. It's 740 been cashed.
It's listed on there.
It is?
Yeah.
So it's not outstanding. I'm going to go over here to one that's probably outstanding. It's 760 being cashed.
Yes.
Check 760 has been cashed.
Yeah, I see it on here.
Then it's been cashed. It sure has. How about check 759? No?
No.
Then that's outstanding, Alexandra. Now, wait a minute. We're not finished, Alexandra. Go down and look at the last statement. Which checks were outstanding? 731, 36, 38, 39?
Is there?
That was last time, but they still may be outstanding. So has check 731 finally been cashed?
Yes.
Yes, 730, 736?
Yes.
It has been cashed?
Yes.
All right, 738?
No.
So it's still outstanding, Alexander. But 739 has been cashed, right?
Yes.
Okay. All right, so that's supposed to be a more real world problem, whether it is or not. That's about what you'd have to do with your checkbook and your bank reconciliation. Okay. All right, now chapter 9. Start work on chapter 9 on Cengage. Okay. So this chapter is bad debts, and it is also notes. So let me bring up PowerPoint if I can on this chapter.
You said this next test on these last three chapters is completely multiple choice, right?
Yes,
Will you still allow us to use a note sheet?
that's the same thing Kelly has.
I wasn't here when that was asked.
Do what?
I wasn't here.
I know.
Was the answer given?
I told Kelly we'd wait and see. All right. Nobody else heard that either, Ryan. But since we have to go through some of them so fast, I'll probably let you have a page of notes.
That's right. Thank you.
Just on the front.
Your God, hard man.
Now, some of these people, they brought them on the back, what have you.
I don't know. Andrew Jackson says that I can use the book on the exam.
Andrew Jackson,
Yeah.
if you talk to him, you're morbid. Okay. Right? So when did you talk to Andrew Jackson?
I don't know. This morning at the ATM.
The other day.
All right, folks, chapter 9. We were talking about bad debts. If you have accounts receivable, you have bad debts. Does anybody in here owe anything? You have any debts? What do you owe, Joshua?
I gotta pay for my truck.
You know, you have a vehicle payment, don't you? How about you, Margot?
Got a personal loan.
Yeah. Anybody else have any kind of loan? How about credit card, bank credit card? What have you? All right. So, Joshua, do you have life insurance or disability insurance? So he's got his covered in case he can't make his payment. Okay. Anyhow, and Joshua didn't go out to buy that truck and get disability insurance just to get it paid off for him. But I have known of people that they were working, they went and bought a couple, 3 new vehicles and a boat and a 4-wheeler. Did a good job. But then they knew they were going out on disability and they got all those paid for. Do what?
That shouldn't be right.
It ain't, it's not right. It's flat out cheating. And I hope they lost more than they gained. Well, I know the fellow did lose his wife. So I don't know what else he lost.
Didn't lose the boat.
So, but anyhow, if these businesses give accounts receivable or installments receivable or notes receivable or mortgage receivable, there's going to be bad debts. So how do we handle it? Somebody won't pay us. How do we know a debt's bad? What if this company has 100 accounts receivable? How do they know one of them's bad?
To be in the red.
Well, I guess, you know, after the terms are up, 210, net 60 or whatever, after the terms are up, if you tried every method to collect, we have a Truth in Lending Act now. all this fire credit reporting acts. So used to, a creditor could call you up and harass you if you owed them money. They could call you at 3 o'clock in the morning. They could even call your neighbor and tell your neighbor what a crook you were. You wouldn't pay your debt. They can't do that now. They can take you to court. Okay. If you see a person is dead, then it's probably a bad debt. If a person's went bankrupt, it's probably a bad debt. I had a used car business one time, and I had an old junker on the car lot. And anyway, a bad check has changed. It used to be probably a felony for over $100. Now, I believe it's a felony if it's over what? Bad check.
That was 1,000, well, that's probably all right.
It may be 500,000. Now, at that time, excuse me, it was over maybe a couple hundred, I'm not sure. Anyway, this fellow bought that old clunker for $100 and wrote out a check. Since it was only 100, we took it without a lot of investigating, but it was bad. The fellow moved to Florida, and of course you couldn't prosecute them in Florida. They were from Virginia, so forth. But people are out there to take you. You know, not all people are dishonest, okay?
It's only $500.
Is it 500?
Yeah, that's it.
Well, if it's over 500, it's a felony, okay?
Yeah, if you have bad debts in the state, if you move to Florida, they can't garnish your wages.
They can't,
Yeah, they can't garnish your wages.
okay? A lot of states don't have reciprocal agreements. All right, so accounts receivable or notes receivable. I'm gonna get down to these two methods. One is a direct write-off method. When it's bad, you write it off. Now, IRS likes this method. All right, when it comes bad, you debit bad debt expense and you credit accounts receivable and creditor account. That's one method. But the next method is the allowance method. We'll get to some of these entries later. Now, if you wrote off a bad debt and he decides to pay it and hit the lottery, just reverse it. Debit accounts receivable and credit bad debt expense and then take his money. The other method's a little more complicated, and it's the one we'll have to spend some time on. We set up an allowance account, and we do a just an entry. We take a percent of sales. All right, we figure that 66,000 is going to be bad. We debit allowance for doubtful accounts, allowance for uncollectible accounts, allowance for bad debts, whatever. And we credit accounts receivable for John Parker. Well, we had to set this up in the first place to take it out of it. Now, under allowance method, you have two scenarios. And one, you don't have to worry about what the balance is in the allowance account, and one you do. If you use the accounts receivable method or balance sheet method, you have to worry about what your balance is. But we'll have to cover that over and over. All right. But I'm going to get to another part. Now, that's estimating accounts receivable as a percent of sales. And that's when we set up the allowance account. Now, we set this up in adjusting entry as percent of sales, and later we use this when somebody's debt becomes bad. We debit allowance for doubtful accounts and credit accounts receivable. So we'll look at that real close on Thursday. So we're going to skip right here. Now, agent accounts receivable, under this method, you have to know what your balance is. Now, what percent, if it's not past due, will not be collected? What percent, if it's not past due, will probably not be collected? 2%. But what if it's over 365 days? What percent will you probably not collect? 80%. The longer it goes, of course, the less likely you are to collect. Now, sometimes you'll get a bill. I'll get a bill from a clinic or a doctor, and it will be 61 days past due because they're still trying to collect from insurance. So we will analyze those two methods after you read this chapter well by Thursday. All right. We'll go back and look at those. But now we're going to look at notes receivable this period, okay? A note. Okay, a note, I guess, has a due date, a face amount, which is $2,000. It has the issuance date. The payee is who the note is made out to. All right. And of course, the maker is the one signing the note. So there's a maker and a payee. The bank is probably the payer, whatever bank it is. Okay, but there's other things to know about a note. First off, we got to know the days in the month. So let's see if you know the days in the month. March.
31.
June, say.
30.
All right. August.
31.
September. Josh.
I gotta do the knuckle thing.
September.
I don't know.
30. December.
31.
February.
28.
All right. March. Kelly. April. Okay. And Margot, this month, November. Y'all did good. Okay. Back somewhere, I don't know, in high school, I remember the rhyme. 30 days has September, April, June, and November. All the rest have 31 except February alone. February has 28, leap year gives it 29. But anyway, there's the knuckle method that Josh was mentioning. I see Margot, you're doing the knuckle method.
I remember something about it, but I don't know what Kelly was telling me about it. She knows it too.
Well, a knuckle has 31 days. January is a knuckle, 31. February is a valley. March is a knuckle, 31. April is a valley, 30. May is right a knuckle, 31. June is a valley, 30. July is a knuckle, 31. You skip to another knuckle, which is August with 31. And a valley is September with 30. Another knuckle is October, a valley is November, and a knuckle is December. So all your knuckles are 31 days. And all your valleys are 28 or 30. Okay, Margot, question. Which months have 28 days in them?
All of
You got that? You got that? Ryan wouldn't have got that.
them.
It said February.
I almost did.
All right. So February has 28 days. Do y'all remember the old wives' tale that leap year? Leap year was the year that females could ask the guys out for dates or ask the guys to marry them. Only on leap year, every 4 years.
Pretty sure it's just a movie.
The what?
Pretty sure it's just a movie.
All right. But that's changed anyway. Females ask guys out all the time. They ask them to marry them all the time. They beg them and everything else. Okay. So it don't have to be leap year now. Right, Margot?
What?
It don't have to be leap year now. You can ask them anytime, right?
Yeah, that's not working.
Oh, that didn't work?
I said that's not working for me. I'm not asking a man to marry me. Sorry.
Well, I agree with you. I don't think you should. I think the man should, yeah.
Yeah, but times change.
Just let
Time
him
change,
ask-
Ryan?
Times change.
Well, if I
So
was
you're
you-
hoping a woman will ask you to marry?
If I was you, I wouldn't.
Oh, you really wanna go there?
I mean, I'm just saying.
But anyhow, yeah, everything has changed, that's for sure. Don't even have to ask the dad anymore, do you?
No, I did.
Sometimes.
Yeah,
I did.
you did? All right, so if a note, if a note is dated 1/10/18, and it is a 90-day note, somebody find me the maturity date. MD, find me the maturity date. "90 days. When does that note mature? Assuming leap year is not in effect." All right, how many days are left in January?
I think it's April 10th. It is April 10th.
All right, well, how many days are left in January? Huh?
21,
February,
28.
March? Whoa, something's wrong here. 90-day note, 21. Okay, that makes how many days? 80?
Yes.
So it will be April the 10th. By coincidence, it's on the same date. If it were a 3-month note, it would be April the 10th anyway. But this is a 90-day note, you've got to count the days. All right? So we'll try a different one and leave out February. Find me the due date.
October 1st.
All right, how many days are left in April?
28.
May, June, then July.
30.
That's equal to,
0. Well, that's why I wasn't sure if it was due on the 1st or the 31st.
well, now, what are these four added up together? Equal 120?
Yeah.
So that note's going to be due on what day? Is it going to be April, May, June, July? Is that going to be August 31?
What I was asking is it due on the 31st or the 1st?
31st July, oh, that's when it ends, right. So July the 31st. All right, so see, it's not August the 2nd. If it were a 4-month note, it would have been August the 2nd, but it's a 120-day note. All right. Now, how well do you remember? You had this in 6th grade math and 8th grade math and 10th grade math, and you had it a lot of places. Do you remember your principal times your rate times your time? Do you remember that formula? Okay, if your principal were $10,000 and your rate were 10% and your time was 90 days. All right, now if I said 3 months, you'd put that over 12. But when I say 90 days, we're going to use a banker's year of 360. How much? $1,000 times 4th, isn't it? Now, Ryan is correct on that, but I want everybody to calculate the principal.
So what was the answer on that first one?
$250. Now, your answer on this one will be $88, but calculate it. Your answer is $88.
So if you're not giving months, you do over 360.
Yeah,
But if you were giving months, do it over 12.
yes.
Wait, what was that?
If it were a month, it'd put over 12. If it's days, put over 360. We got $88, Ryan. Everybody got $88. All right, Alexandra, give me a principal here.
12,000.
All right. Your answer is $120 for your interest. Take a minute and calculate. Your answer would be $120 for your interest. Got 120? Saith, give me a principal. Don't give me an even number like that.
17,000.
What?
17,000.
That's an even number. Your interest is $170. I'm going to double the interest rate, 6%, 12% interest is what you're paying on a car now. Ryan, give me a number.
$4,325,072.
Oh, God.
You wanted something to do?
Keep it under 100,000 if you can.
$999,999. Your criteria was even.
I know. Your answer will be rounded off to $20,000. See if your answer is $20,000 rounded off. Is it?
Pretty much.
All right. We'll leave that 6%. We'll change this to 90 days. Give me a number, Joshua.
7,440.
All right. I'm trying to do this with my head.
Once you get two copies.
I know.
$1,011.60.
Is that 16? Is it 1,016?
2011.
The 11? I missed it there somewhere. All right. Now it's like something like 680,000. I could have gave it to you real fast. Okay. All right. 600,000, I'll give it to you even faster. So your answer there would be $9,000 interest. Okay. All right. I was up here in 1979 and I was teaching intermediate accounting. And that formula is your principal times your rate. And you can put that over 100 and 6 over 100 and times your time 60 over 360. And I was looking at that in class on a blackboard at the time. And principal, let's say, was something like 5,000. And when I was looking at that, everything canceled out. 60 over 360 reduced to 1/6. 6 canceled out. So if it was 6%, 60 days, all I had to do is divide by 100. If you divide by 100, you move the decimal 2 to the left, and that'd be your answer. And I call that the 60-day 6% method. Okay. Now, if it were 90 days, I just knew to take that $50 and take it times time and a half, and your answer would be 75. If it were 12%, I just knew to double that. 5,000 times 2 is 10,000. Then half of that, your answer would be 15,000. So that's my shortcut method that you don't have to know. Okay. So we're going to practice a couple of these though. So now let's get serious. I want you to work 3 little problems. You at home should be doing this. And anyway, that's 4 months. Okay, figure that out, folks.
Can't see all the numbers.
What?
Just click,
Where?
click somewhere else.
Oh, right there? What happened to it?
There you go, that's it.
Oh, I didn't see what was wrong with it. We have to count interest on a notes receivable. That's what we're doing, okay? Interest on a notes receivable. We'll get you signed in, man. All right, you should be answering those by now. So, Kelly, what have you got on the first one? How much? 350? All right. Does everybody match that? Everybody's okay with 360? Dylan, what'd you get on this one?
1,000.
Everybody matching 1,100? You didn't have any trouble changing 5.5% to a decimal, which is decimal 0.55? All right. Seth, did you get 1,100? Everybody's okay with that one? All right, number 3, Alexander Fanning, what'd you get on it?
4,333.
Is everybody okay on that one? Now, what does that mean? Does it keep repeating itself? Decimal 33333, right? All right. Of course, we would take that out to the nearest penny, not to the nearest dollar. Okay. Now, that's a little bit about notes. Now, when we issue a note, okay, now how do we get a note on our books? There's 3 ways we can get a note on our books. We can sell something and debit notes receivable. If you were selling something like a big truck or a dozer, a bobcat or something, you debit notes receivable and credit sales. You start charging interest from the get-go. Now you also, if somebody can't pay their accounts receivable, they may come in and put it on a note. Now also, you may loan one of your customers cash, and you debit notes receivable and credit cash. But anyway, when that note's receivable, and what was that first note, Ryan? How much was that first note out of those 3 problems I just gave you? And how much interest was on it? Dollar amount now. What? All right. So we debit notes receivable. Maybe we loan the customer cash for $12,000. Now we collect that note. We debit cash for how much? And we credit notes receivable for how much? All right, then what do we do with the 360? Interest income or interest revenue. That's pretty much your notes. Now, let's look at the parts of a note. Now, on that note that Ryan just gave me, the face amount was $12,000. Thank you, dear. All right, and the interest was $360. Therefore, the maturity value is $12,360. So I may ask you at times to find the maturity value. And I may ask you at times to find the maturity date, which we did a minute ago. Remember, one was July the 31st. Now, I may ask you to sell this note to a bank. Now, what was the interest on this note? What was the interest? What rate? All right, but you're going to sell it to the bank. You want your money up front. Bank's going to charge you 10%. You're going to sell this note to the bank. Bank's going to charge you 10%, but they take their interest out up front. So 10%, $12,360 would be how much? Yeah, that'd be for a year. All right. You sell it to the bank, they won't charge a year's interest. Let's say they just charge a month's interest. All right, a month. How much interest then would that be?
$103.
All right, what we have here, you're going to sell this note to the bank. They're going to charge you $103 interest up front. All right, and they're going to give you $12,257, and that's called proceeds. And that $103 is discount rate amount, not interest. This is the interest amount. All right, so now we're going to have to follow that note through to a discount at the bank. Now, if the person don't honor it at the bank, you're going to owe that bank the money. But right now, you would debit cash for $12,257. You would credit notes receivable for the $12,000, and you still got interest revenue of $257. Interest revenue. Okay, so now that's enough to go on, hopefully to give you an incentive to read chapter 9 real well. And by all means, have problem 4 done on chapter 8. Have your sin gauge brought up to date. So that's enough assignments for Thursday, isn't it? I've got 9 people here today. We started out with about 20. There's still about 17 hanging around. But out of you 9, who have not missed a day? 7 people haven't missed a day. That's pretty good. How many of you missed, Dylan? 1. And who else missed a day? Josh? 2. Now 9 people, 7 have perfect attendance. Hats off to you. Joshua missed 1 and Dylan missed 1. And they're here today. And just looking around, I think they're all above sea level when it comes to grades, okay? Now, you folks that are not here today, I just don't think all of you are above sea level. So maybe you should think about attending the last 2 or 3 meetings. Okay, see you all Thursday.